Hi there. Do you know where the 8% of the global GDP is preserved? We are talking about a whopping 8 trillion US dollars. Well, that seems a lot, but wait a minute. That number was dated until 2016, and now, to make it worse, it is 10%.
Where do you think all that money can be stored? In a first world country, you may find yourself surprised that they're actually stored in small islands and countries that maybe you never heard in everyday TV news.
But how is it possible? Well, have you ever heard about tax havens? A tax haven is a country that offers foreign people and businesses a minimum tax liability. This comes with a politically and economically stable environment with little to none financial information shared with foreign tax authorities. Those who want to invest in a tax haven don't actually have to live in the country to benefit from the tax avoidance. But being a tax haven is beneficial for the elites of the host country as well as the companies and people with accounts in them.
Now, we will explain how the whole thing works through the Panama example. Panama is very famous for tax avoidance and money laundering because of its loose jurisdiction that does not cooperate with the international tax laws or the transparency initiatives. But first, let us explain that there are different ways in which offshore operations can work. One of the primary methods is corporate profit shifting. This is where a multinational company registers its headquarters in a low corporation tax jurisdiction and then books its profits there, rather than in the country in which operates. Offshore companies incorporated in Panama and the owners of the companies are exempt from any kind of taxes. Not only that, but they have an extensive law not to provide, but instead to protect corporate and individual financial information, making for the institutions even harder to trace down the anomalies.
And what about personal taxes? An individual could simply become a resident of a low-tax country in order to pay a lower rate of tax on their income. This is what racing drivers and sports people generally do. But there are also ways in which individuals can live in any country and still receiving benefits from tax havens. If an individual keeps his assets in a trust, he can legally avoid paying capital gains in the country in which he is resident. The names of the shareholders of the companies are not publicly registered. The same applies to Panamanian banks and its clients. This translates into zero transparency.
Panama also has few tax treaties with countries that are profoundly interested in such economic interests, further protecting the financial privacy of offshore banking clients who are citizens of other nations. Another thing is that they don't have any exchange controls. This means that there are no limits or reporting requirements on money transfers into or out of the country.
However, as you may have realized, even when the main use of these places is for tax avoidance purposes, nowadays are also being used for corruption. For example, you can put the bribe money into one of these offshore accounts, and thanks to the disclosure laws, no one could ever know anything about it. And for that very same reason, it is used by international crime mafias and terrorist groups for money laundering.
And what about the Panama Papers? On April the 3rd of 2016, a huge amount of 2.4 terabytes of data from the Panamanian lawyer's office, Mossack Fonseca, were made public. The collaborative work of the International Consortium of Investigative Journalists revealed how Mossack Fonseca facilitated a wide-scale tax evasion through more than 214,000 offshore entities. Connections to persons and companies in more than 200 countries and territories were exposed, covering a wide range of high-level persons such as politicians, sportsmen, and wealthy elites. While the size of Panama paper leaks was unprecedented, so are its revelations about the sheer size of tax evasion through offshore constructions, especially considering that the Panama Papers uncovered the offshore activities of just only one law firm.
In the book, The Hidden Wealth of Nations, Gabriel Zacuan estimated that about a whopping 7.6 trillion US dollars of financial wealth is held in offshore tax havens, leading to a loss of tax revenue of 190 billion US dollars. The systemic problem of tax avoidance delivers an additional blow to the legitimacy of the globalized financial order, whose many excesses were brought to surface by the global financial crisis. This crisis created an unprecedented momentum to regulate the offshore world.
It is important considering that since tax avoidance is a global issue, it raises huge inequality gaps consequences both as local as in the global scope. In the global aspect, Zuckman, in his later work, along with other researchers on microeconomics, have found that by 2017, the 10% of the global GDP was held offshore, which means a rapid growth in this illicit avoidance. Not only the obvious consequences should be mentioned, like that all that money would help to the local development in the countries of the avoiders, but also that the gap between the rich and the poor is growing.
The problem, however, begins when we have to measure it. Nowadays, reports are being global spread in which they state that rich people is not becoming richer. However, those assumptions are made with official numbers, not with the ones that remain under the shadow of the tax havens.
Then we could say it is a global and local affair. But in the specific case of Panama, one of the fastest growing economies in Latin America, it also creates a huge gap of social inequalities since this money remains in the political and social elite, and only the 3.3% of their GDP is used in a fundamental development feature such as education.
Indeed, we need a reformation in corporate taxation within the host countries of tax havens such as Panama. However, it is always better to think international cooperation as part of the free trade negotiation, international treaties, as well as the reinforcement of international laws in order to avoid further inequality gaps in both global and local level.